What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a look over here at the Bitcoin price chart, the Ethereum price chart, the altcoin market, and all the chaos going on in broader markets as we had the CPI data release yesterday, which gave us our breakout here in the market. On Monday, we were talking about this. We were reaching the end of this range. We're in a volatile week. It's the week for something to happen for this range to break. Yesterday, we did get it, so we'll talk about that. I did a live stream yesterday because price action was so crazy. Now things have calmed down a little bit. Later today, we're going to have the Federal Reserve interest rate hike, so we'll talk about that. Lot to dive in today, but first we'll start here with the price charts for Ethereum, Bitcoin, and the altcoin market. What we saw happen yesterday with the prices was we popped right back up to the top of the range. We saw this happen here for Ethereum. We also saw this happen right here for Bitcoin. And this is something we've actually been talking about since November. Here it is from 2 weeks ago, completed crash structure, analyzing waves on the altcoin market. Remember talking about 1, 2, 3, 4, 5, 6, 7. If you remember in that video, I was showing another video I had done from January of 2021 discussing 1, 2, 3, 4, 5, 6, 7s, and that we had already completed that. And for something like that to continue, what I would be looking for. Why do I say something like that? More ranging in the future and continuing ranging is because that even a move up right in here, people likely would be looking for a trend change to emerge and for us to just keep marching and that there would actually be a trend. But I do actually think we'd still stay range bound in here for a little while, simply because that's typically what usually happens. And in the video prior to that, the great catch up, talking about the same thing, noticing 1, 2, 3, 4, 5, 6, back to wave 4. We had 7. We talked all about this stuff, but what were we looking for? But the thing I am waiting for is however the chaos will play out right in here and then scooting back up to the top of the range. And then it probably still has to keep waddling along. So the price area of interest for me is really just getting back to the top of the range. Then I kind of start getting fearful again and saying, hey, look, I see excitement's probably returning back to the market right now. Just understand this is probably a range. So took us a while to get there. Took us over 2 weeks to finally reach back up to that level. It's the place that we were looking to get to continue this completed crashing structure. So far, so good still. In my live stream yesterday, I did reference back to different charts to show how these things do play out. How you have the 1, 2, 3, 4, 5, roll back up for 6 and 7. Then we get back up to the top again and then have to have a long and grueling ABC in here before things can finally start going and really get going. This is the bottom of Bitcoin back in 2018. And the original video used referencing back to January of 2021 was actually using the XRP price chart. So here we are on a different time frame in which that's what we had happening in here before rolling back up for 6, 7. And then where do we go back to? We go back up to the top of the range before going grueling and grinding in here to eventually go. So this was a critical step to occur in here. A lot of people were worried that we were going to break down from this range and that this would actually end with a big kerplunk from here and the continuation would keep on going. But nope, we're still following along with what we're supposed to be doing. So I'm thrilled to see that happen. My expectations haven't been that we're getting ready to break out and go soaring to the moon. I talked about that in the live stream. If you notice, I'm not making thumbnails saying imminent breakout on its way, getting ready for big prices to end up coming, because my thesis is of what we're doing in here. This is what these accumulation schematics look like as we're nearing the end, and especially here on these Wyckoff accumulations like we see on the total altcoin market. Every time these things happen, that poses our big problem. 1, 2, 3, 4, 5. This guy is our resistance right there. Number 6 is the resistance. It's typically once you can actually break through that, then it's time to start turning on the optimism. And it's funny because I was having a DM conversation with somebody today, somebody who's been an absolute supporter of the channel for several years. And I was showing him all of the excerpts from my cryptocurrency emotional log that I have from back at the bottom of Bitcoin back in 2018. Hard to believe. This is now 4 years ago when all of this happened, and just how the emotional state was in the crypto market and in myself when we were in these time periods right in here. And that even when we got back in here, nothing got easier, right? So just because the bottom was in, The fear was certainly still there that we were going to crash another 50% at that point. Nothing emotionally felt better. And like I went to the logs over here when we actually had the breakout that happened there in early April, how I was pretty much numb to it. I had kind of like trained myself at that point. Don't trust any rallies. They don't really matter. Still kind of having doubts and uncertainties in here. Then getting up in here being like, oh, okay, it's interesting. And then getting over here and by June 22nd, recognizing the euphoria that was going on in the market and the euphoria going on within myself and how excited I was. But all of the logs that I have going through here of how just absolutely torturous it was in the market, even though I was buying it, still being like, man, everybody is screaming that we're going 50% lower, and they might be right, but they were not. And that by the time euphoria hit, it was only 4 days later that the top ended up coming in. So it was really interesting, but the kind of point of it is in these types of environments right in here, if that's true, if we still have some working out to do, that would just mean we're hanging out in these areas here and there's still more accumulating to do down in here before things can really get going, which is like what we saw for XRP several years later at the same time. Same schematic, same situation, grinding out in here. It's still possible. I would say the thing, and I discussed this in the live stream, I would say the thing that's optimistic for things to maybe move a little faster than that would be that in most examples, after we have 7 come in here, we usually shuffle up here pretty quick, and then we start kind of ABCing for a while. This really consolidated its way up to the top. So maybe not so much, but we can clearly see in here 5 sets of waves. So we see 1, 2, 3, 4, 5. And so we have a clear 1, 2, 3, 4, 5 Elliott wave happening in here. And typically what you're going to see is you're going to see an A, B, C. But on my YouTube channel, I never try to present myself as some type of guru. Anytime that I see something or I have a thought on something, I try to show you exactly how I've come to that conclusion. And then you can decide if there's any validity to it or not. I spent all my time digging through charts, and then showing you the things that I find. These are one of the things that I've learned over time, many times, because it happens all the time, is how these endings end up happening. And that we have the 1, 2, 3, 4, 5, roll back up, 6, and 7. And so then we move our way back up, but that's still a consolidation area for a while in here. And so if you remember correctly, like going back to what Bitcoin was looking like at the top, this is also what we were using at the top. It was I was heavily criticized at the top of the Bitcoin bull run because it was perceived that I was a fudster, but I was also using this exact same method, not only in coordination with the 4.236 Fibonacci extension, but to actually pinpoint that the wave count structure was showing that the top of Bitcoin was coming in 2021. And if you didn't catch it during that time, if you weren't watching the channel during that time, you say, how the heck were you able to use the bottom of Bitcoin to determine how the top of Bitcoin would actually end up looking? And people were probably pretty sick of it at the time when we were doing it. But we were merely just looking at it from the inverse perspective to say, this is what reversals actually end up looking like. And that Bitcoin had done 1, 2, 3, 4, 5, rolled back up to wave 4 for 6, and was going on for 7, and that it was going to do the same thing. And so notice that as it sets its low, it sets one new low, and then it sets one more new low. And that's exactly what we were having happening for Bitcoin over in here. And that the anticipation was that we would set a new all-time high for Bitcoin, because remember, this is the inverse chart. We would set a new all-time high for Bitcoin, but it just wouldn't be by much. And if we inverse what the bottom of Bitcoin looked like in 2018, that's what we would have looked like. And so we were presenting the exact same structure happening here for Bitcoin at the top as we had at the bottom. But it was just important to be able to recognize what this was looking like in here for Bitcoin when we remove our biases of direction. So we're using a lot of inverse stuff to try to throw off any type of biases we could have for just directional choice. And so why do we keep referencing back to these things, right? It's because after we get 7, we typically will pull back up in here and we'll get back up and we're not able to break above here, right? And that's what happened over here as well, that we're not able to get above that price level. And then it does have to consolidate in here with even an ABC emerging in here on the inverse price chart of Bitcoin, with an ABC happening here at the bottom as well back in 2018. And so not only do we see that happening over here on XRP after it finally gets way back up in there, it's got to consolidate longer. There's other examples that we've referenced to as well as these things are happening too, is that, hey, we were looking at XRP from back in here. You're talking about 2020. 1, 2, 3, 4, 5. See, here's 4 right there. Rolls back up. 6 and 7. Where do we get back to, right? We get back into these price levels, but notice that we're not able to get above it. We still have more work we have to do before finally it can really get going. What's another example we've used? We've used Litecoin too. So Litecoin has the same story going on in here. Litecoin rolls back up, goes in for 7, comes off the lows, finds its resistance back there, then has to pull back one more time, and then finally is able to get going. So in each circumstance, we do see that just because we get back here, it doesn't mean it's over yet. Doesn't mean we're in the clear yet. And so like with Bitcoin, right? Like we're getting there. We're at that level, but we're not through it. And we're not through it with some conviction. We get through it with some conviction, it'll be like, you know what? Maybe this was it. Maybe this was enough of a pause that happened in here that we needed for like past times. Maybe that was it. Maybe that was good enough. Maybe it was just sloppy and we've been working out all of this stuff over in here, but that requires quite a bit of guessing that things are slightly different. So I have to go into it, like I said, back on November 28th and November 29th, of being like, look, let's get to the top of here. This is perfect, right? We've got our structures. We've got our perfect setups happening here of what bottoms look like. The next phase after we go in set number 7 is to go head back to the top of the range. But the next phase that shows up and emerges in all of these examples where we're looking at XRP, we're looking at Bitcoin, we're looking at inverse Bitcoin, we're looking at XRP on multiple time frames, we're looking at Litecoin, there's still this one last phase. If we get some type of big breakout that can get through all of this and get past here, well, then it's time to start putting rocket ships on top of thumbnails and in titles. But until then, I hope we can recognize that I have to exercise caution here while we're right here because of all the examples that I've shown, and that I still remained optimistic when the world believed the sky was going to fall, and that still all the FTX and SBF saga was going on in here, saying, look, I'm looking for us to head back to the top of the range up in here, and that we got here. And I even said in the video that once we get there, then I'd be fearful again. So this is not me operating on whim of the moments. This is weeks ago saying, this is the big picture of where I think we're headed to. We're now back there. I've shown all the examples on why I thought we would get back there. Now that we are back there, I'm going to do exactly like what I said I would do. Exercise caution as we're here, because in most examples, what we see is a pullback. But then after that, I become what I was called back in March, April, and May of 2020 when C19 was going on, an irresponsible moon boy. I will become the irresponsible moon boy. Imminent breakout on the way. Get ready. Things are going to get crazy. It's going to get wild. But there's still this one step that I have to be wary of first before that comes. And before I can start being that guy. But watch out. It's coming. That guy is coming. And be careful, Fed experts, Twitter Fed experts. I don't care what you say. I will start getting moon boyish. So unfortunately, though, I still have to keep my caution going until we get through this entire moment. Today, obviously, it's our volatility week. So what happened yesterday, right? We had our CPI come out yesterday, the consumer price index. It shows that inflation has slowed down. We had a 0.1% inflation print for the month of November, caused the markets to pop immediately. And then it took it all back because it's waiting for what's going to happen today, likely. So this is the big day. So, you know, everybody wants to just hear the words pivot, but I think today is just such a huge day. And in the last 2 weeks, we've been talking about this, and we won't be talking about this after this moment. I know we rarely talk about interest rates and dissecting the Fed and stuff like that, but it's because it has this strong feeling that a narrative shift is going to happen later today and tomorrow to kind of like have our heads wrapped around understanding what this narrative is actually going to mean. And I don't know what it's going to be, but trying to understand ahead of time what's actually happening in the markets. And so as we can see, I've had these lines on the screen as we get closer and closer. So each time the Fed has done these 75 basis point rate hikes, they've been able to play catch up to the 10-year and the 2-year Treasury yields. So today, today, the market anticipates that the Fed will not do a 75 basis point rate hike. So we've done 4 of those in a row. It's anticipated that we will do 50. So from a narrative standpoint, it already sounds better to hear that the interest rate hike is going to be smaller, right? 475s. Finally, we're doing a 50. Is there light at the end of the tunnel that this thing's coming to an end? But the thing that we're even noticing about the 50 basis point rate hike is that the 10-year yield is below where we currently are right now. So the current federal funds rate is from 3.75% to 4%. In each of these rate hikes, they've been able to play catch up to both treasury yields, the 2-year and the 10-year. For the first time in this whole hiking cycle, they're expected to do an interest rate hike to the federal funds rate, while the federal funds rate is already 0.25% above the 10-year yield. At the same time, the 2-year is even given more of a gap. And right now, if they actually do a 50 basis point rate hike, they will exceed the 2-year yield. So we're getting to a point now where the federal funds rate is going to be higher than the treasury market wants it to be, or says that the treasury market is saying that the market can handle. I have zero way to predict what they will do in regards to, is it going to be 50? Is it going to be 25? Is it going to be 0? Or is it going to be a drop by 25 basis points? I don't know. The only thing I can do is look to other experts out there and say, what is their opinion? And the general consensus out there is that there will be a 50 basis point rate hike. But if I'm only looking at treasury yields and they come out and they say, you know what, we're only going to do 25, I would say to myself, it makes sense they only did 25 because that way they're not exceeding the 2-year yield. Or if they come out and say, we're not going to do anything, I could understand that. Why? Because the 10-year is already below them. Or even if they said we're going to do a 25 basis point reduction, I would say that makes sense because they're going down to the 10-year. But none of those things would, like, in my mind, sit here and make me say it's bullish. I'm more so wondering, what are they going to say after that? Like, I could understand the justifications for any of them. If they do the 50 basis point rate hike, I'd be kind of like, wow, okay, that's crazy. Yeah, they did reduce it off of 75, but still, they went beyond the yields. That's crazy. If they only do 25, okay, that makes sense. I didn't want to go above the 2-year, but it's not like we sit here and I scream to myself, yes, bullish, a pivot's coming. It's more like, is the market telling them they just can't do it anymore? Is there something wrong? So, how we'll interpret it, we'll see. It's going to be volatile, I would assume, very volatile. That will happen early this afternoon. It'll be at 2 p.m. Eastern time, 1 p.m. Central, 11 a.m. Pacific Standard Time. But, get ready. It's probably going to get volatile. Just even the fact if they're going to 50, it just means something has changed, right? We're not doing 75s anymore. And if they don't do 50, if they do 25s, then the whole market's like, wait, why did we only do 25? Or if we do 0, whatever it is, I think it's all going to be crazy. Let's get through it and we'll see what they say afterwards. The whole point of it being is that there's likely a narrative that's different today than what we've seen from the last 4, because we can clearly see on the data of what they were capable of doing with the last 4, and that the data is different for this one. So just buckle up. We'll see how it goes. Probably going to be super volatile today as it was yesterday morning. And well, it's really interesting that the crypto market, Bitcoin, Ethereum, they've gotten back to the top of that range right as this moment is going to be happening. And as we all know, the Dow Jones Industrial Average sits up here at the 702 Fibonacci retracement as this moment is happening. Magical unicorn dust. So we'll get through today and we'll take it in strides tomorrow. Another little side note, if you've been on Twitter at all, there's been a lot of fear out there regarding Binance, people trying to do a bank run on Binance because, of course, post-traumatic stress disorder after the FTX collapse. CZ Binance commented last night saying things seem to have stabilized. Yesterday was not the highest withdrawals we've processed, not even top 5. We processed more during Luna or FTX crashes. Now deposits are coming back in. So nice to see a stress test done over there on Binance. The last thing any of us want is another one of these events to occur. So glad to see they're doing okay. And I think it's good for crypto for us to at least have a little bit of reassurance that they can handle something like that. So, all right. Here we go. Let's get through today. It's going to get crazy. It's going to get volatile. There's not been a Fed meeting yet that hasn't been volatile. And we can see on the data how the data is different. And we will see how prices react during that moment. But on that note, I will catch you guys over here on Twitter. I want to thank you all so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.